Today, I will cover what the top economic bodies are forecasting for home sales, home prices, and interest rates for 2024. This past year, 2023, was marked by challenges for mortgage holders in Canada due to rate hikes. However, there's optimism in that 2024 will usher in some much-needed rate relief. Well, let's explore the various insights and predictions shared by various experts in the field. In 2022, the Bank of Canada implemented 400 basis points worth of rate hikes, followed by 3 quarter-point hikes in 2023. While some borrowers saw increased payments, mortgage delinquency rates, though slightly higher, have not reached alarming levels. Now, looking ahead, the Bank of Canada estimates that 40% of mortgage holders have already experienced rate increases, with a significant number facing renewal pain in the coming years. Now, the expected interest rate cuts in the future are anticipated to alleviate the burden for many. So let's start by looking at the real estate market forecasts. Let's turn our attention to forecasts for the Canadian real estate market in 2024 from various sources. So let's start with the Canadian Real Estate Association, also known as CREA. CREA predicts a 9% year-over-year increase in home sales, with a 1.5% growth in the national average price. Royal LePage forecasts a 5% year-over-year increase in aggregate home prices, emphasizing the great adjustment to mid-single-digit borrowing costs. RE/MAX anticipates a modest 0.5% year-over-year increase in the national average home price, suggesting a potentially active market in 2024. RBC Economics are projecting a 9.4% year-over-year increase in home resales, with a 1.9% growth in the national average price. TD Economics expects a 5.2% growth in home sales, along with a 0.5% growth in home prices. Now let's turn our attention to interest rate forecasts. 2024 is anticipated to be the year of rate relief. Bond markets suggest a 15% chance of a rate cut this month, with most economists expecting the first Bank of Canada rate by mid-year. Forecasts from major banks indicate a decline in the overnight target rate to at least 4% by the end of 2024, down from the current 5%, which is where we're sitting at today. Now, bond yields, which influence fixed mortgage rates, are also expected to decrease. Let's take a look at what the big six banks are forecasting for the end of 2024 all the way to 2025. The Bank of Montreal expects a target rate of 4%, down from 5%. CIBC is forecasting 3.5%. National Bank of Canada is anticipating 3.25%. Royal Bank is projecting 4%. And Scotia is predicting 4%. TD Bank is expecting 3.5%. Now, all of these forecasts suggest a trend towards lower interest rates in the coming year, providing potential relief for mortgage holders. As we anticipate the year 2024, experts foresee a rebound in the Canadian housing market and a positive shift in interest rates. The real estate market is expected to experience growth in both sales and prices, as predicted by the experts. Although there are varying opinions on the extent of this growth, the consensus, however, is that interest rates will likely decrease, providing relief for mortgage holders. The overall outlook suggests a dynamic year ahead, with the potential for a positive impact on the Canadian economy. Who you work with matters.